Across the globe, market experts have predicted that more than a decade-long bull run is over and recession knocks. And given the current circumstances, it's a bit difficult to disagree. So what's the first thought when you hear recession? Loss. Now in case of a recession, long-term investors generally rescue their investments and go hedging against rising inflation to avoid loss. And since forever, gold has acted as a classic hedge instrument whenever global economies seem failing. Why? Because it has been observed to retain or increase in value during market corrections or even outright market crashes, thus preserving or even boosting an investor's purchasing power during downtimes. Until 2008, no other asset could compare to gold when it came to hedging. Then Bitcoin arrived and changed the game. Since day one, Bitcoin has been termed digital gold due to the identical intrinsic properties it shares with gold, like limited supply despite the demand, mined and not issued by a bank, independent of traditional markets, not controlled by any governments, divisibility, and more, where Bitcoin has an additional advantage of being a digital asset, offering ease in payments and portability. So far, Bitcoin is identical to gold in terms of design and better in terms of returns. Recently, it outperformed gold, becoming the best performing asset of 2020. After the pandemic-induced market crash, while gold recovered merely around 15 to 20%, Bitcoin made almost a 100% recovery. Comparing the two even during ordinary market conditions, although gold does a good job at retaining an investor's purchasing power, it literally crawls when its growth is measured against Bitcoin. Question: so if gold and Bitcoin are similar, how come gold crawls and Bitcoin doesn't? Answer: mining reward halving. As per the market, it has been observed that each mining reward halving pushes up Bitcoin's price, ensuring that it doesn't stagnate like that of gold over a longer period of time. Considering fundamentals, another huge advantage very specific to Bitcoin are the inevitable mining reward halving events etched in Bitcoin's timeline, scheduled to take place once in every 4 years. In other words, Bitcoin has been programmed to grow naturally, well at least till October 8, 2140, the date on which the last Bitcoin is expected to be mined. Till recently, the major reason why investors have been avoiding Bitcoin for hedging and rather routed for gold was the former's volatility. But with better investment techniques like DCA, Bitcoin is gradually gaining a new outlook among traditional investors, and the shift is already happening. And we believe the golden days of Bitcoin have already begun.